What are you advising clients to do with their equities given this rise in rates? Everybody's kind of shocked a little bit, I think.
Yeah, thanks for having me, Brian. The markets were off to a slow start this year. I don't think it's much of a surprise. I mean, there's a major sector rotation going on, and I think that's going to continue throughout at least the first half of the year. The rotation has everything to do with interest rates, but also where valuations are right now. The Fed is trying to tackle inflation. Every time Chairman Powell speaks, he brings up inflation. And there are some concerns that the Fed, may hike rates, I think, a little too fast. I certainly have concerns that they may do so. But, what's really interesting is to watch the dollar over the past week. Despite all of the rate talk, the DXY is down. So, it shows how much is already, priced into the market here. But there's a change of leadership in the market going on. And that type of rotation doesn't happen with some bear market action.
And a little birdie has told me that you might be a buyer of some energy equities. I know a lot of people aren't buying these stocks at all, ESG and what have you, but you think there's some good value here.
Absolutely. Despite the comeback in 2021 after, a tough 2020 with COVID, the energy sector will continue to, I believe, have a strong 2022. I mean, you have to have some exposure to the energy names. So whether it's in the midstream space, like an Energy Product Partners, or whether it's, one of the majors like Chevron, you want to focus on cash flow. The main thing I tell my clients is, when you look at some of these high multiple stocks that are now selling off, right? You mentioned a couple of insider buys in a few of them, but, during a rotation in a deflationary world, you can pay almost any price for future growth. But when inflation spikes and the Fed has to act, you want to focus on current cash flow. And the energy sector is less than 3% of the S&P 500. That's pretty low.